morning. It is September 9th, 2013. I am Wade Byers with Benchmark Home Loans, and this is Wade's Weekly Update. We are just touching on the Middle Tennessee mortgage market and real estate market and kind of giving you an update on what's going on this week. So I just saw a stat. Fannie Mae did a survey in August just to kind of see America's outlook on the housing market, and basically what they determined is that the housing market has kind of leveled off. And that's kind of America's sentiment on the housing market, mainly due to everyone keeps hearing about the Fed's tapering of their bond buying program, and that is what everybody seems to be afraid of, is that is going to start happening in September, and that's going to drive interest rates up. So people are getting scared of that. What I would say, if you're getting scared of that, let's look at getting you pre-qualified and finding a house for you. But so that's kind of what's going on with the market. I think it is probably leveling off a little bit, but it's still a good market. It's a great market to be selling or buying. So I wanted to touch on interest rates a little bit today. Just I know there's a lot of talk about interest rates, and I don't really like to get too technical on this stuff because it takes a while, and most of you don't really care that much. But I wanted a lot of talk about tapering and the Fed and what's going on, and this is coming up pretty soon. So basically, over the last month and a half, interest rates have been very volatile due to a lot of uncertainty in the economy. And then we've now recently thrown Syria into the mix. So that's causing a lot more uncertainty. First of all, you need to understand kind of how the financial markets work. For one thing, there are no rules with the financial market. There are trends and things that tend to happen, but there's really no guarantee about what's going to happen. You know, if this happens, what happens? So typically in the economic world, when the economy is good, investors are typically buying stocks. If they're buying stocks, that means bond prices are really what drives interest rates. So if people are buying stocks, they're not buying bonds, that means that the price of bonds are staying low, and that in turn means interest rates are higher. So I know that's kind of an inverse relationship and might be confusing, but essentially what it boils down to, if the stock market's doing well, that's probably hard on interest rates, because just like you probably heard in the past, if the economy's doing good, usually interest rates are going up just like everything else. So kind of what's going on right now. First of all, Syria is a big thing for investors right now. Basically what it boils down to is if we decide to strike in Syria, the investors will start pulling out of the stock market and investing more in the bond market, which would be good for interest rates. We're expecting to know very soon what's going to happen over there. So the other big thing going on right now is the Fed will meet on September 18th. What they're meeting about is the government, as part of their quantitative easing, as they called it, but it was basically an economic boost, as they're buying bonds from the bond market to try to keep bond prices high, and that keeps interest rates low. So what they're talking about doing is starting to scale back how many bonds they're buying and try to let the bond market kind of work on its own again. So what everybody fears is if they start doing that, investors will stop dropping out of the bond market, bond prices start dropping significantly, and then interest rates go up because of that. So that's kind of what's happening. I saw just a few minutes ago, actually, 49 of 69 economic experts seem to think that they will start tapering at the end of their meeting on September 18th. I don't know what to tell you. I think I have a hard time believing that. Basically, all of the economic data we're receiving over the last month or so has not been bad, but it's not been great either. And then we've got a bad jobs report recently. The jobs are not where we want them to be. So I have a hard time believing that they'll start tapering in September, but it is a possibility. So and it seems like the experts seem to think that's what's going to happen. So if that is what happens, then most likely interest rates will start to rise up a little bit. So Again, that's really what I have for today on interest rates. I know they can be very confusing and it's a lot of technical information. And if I could tell you where they were going to be, I wouldn't be sitting here talking to you today. I would have capitalized on that and bought my island by now. But that's really it for today. If I can ever do anything to help you, I'm happy to talk through this in any way I can or give you assistance in any way I can. But my biggest advice right now is if you're in the market or considering buying a house, try to start making a move now. Call me or whoever you trust in the mortgage world and get pre-qualified, or talk to a realtor for a recommendation to get pre-qualified and start looking for that house, so you can capitalize on. Rates are still really, really low based on where they have been historically. So again, I'm Wade Byers with Benchmark Home Loans. Always feel free to call or text me at 615-335-3356. I'm always available to help in any way that I possibly can. Thanks so much and have a great week. Bye-bye.